There are all kinds of indicators that are screaming this market is overvalued. But until the trend actually rolls over and changes and breaks down and starts creating a new downtrend, you really don't want to be betting against this market.
This week's special with Miles Franklin Precious Metal Investments. 2021 1-ounce silver Kangaroos for only $3.80 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Thanks for having me, Elijah.
Definitely. Now, last time we had you on was about a month ago. You were saying that short term, while long term you are very bullish on silver, you said short term we could see a pullback, and that's what we saw in the last few weeks. What kind of impact has that had on the charts?
Sure. Yeah. Well, we definitely saw a sharp pullback since you and I talked. The markets, the gold and silver collapsed along with miners. It's done a little bit of damage to the charts, but really, I mean, gold pulled back to a support level that it saw earlier this year back in March. So that was actually also a measured move. I could pull up my chart real quick and I could actually give you a visual of what it looks like. If we were to take a quick look at gold, this is the daily chart of gold. And we saw how gold had a huge collapse here and had this long lower wick. Well, it came right back down to the March lows that we saw. So that's naturally going to act as a support zone. But if we also used technical analysis based on the previous drop and the rebound, you can use Fibonacci extension, which tells us, okay, based on the drop and the bounce, how much downside potential does this trend actually have? How much power is there? And so that continued all the way down to this green line, which you can see there's a little wick right down at that level. So gold actually had a perfect 100% measured move. It hit a bottom also from March, and it's having that knee-jerk reaction. And that's what happens when a lot of things from a technical standpoint align. So gold, as you can see now, has had a knee-jerk reaction, bounce back up. It's stuck under these key moving averages, which is the green here is the 200-day moving average. The blue moving average is the 50-day. And so gold is still really out of favor. Both moving averages are sloping down. The 50-day is below the 200-day, which tells us gold is actually in a short term, like a bear market. And, gold is trading at those levels in this previous high. So gold likely here is going to be under pressure, probably could continue to trade sideways or lower. We really needed to break the highs that we saw back in July and in August here, right around 1835, 1840 in that area. Once it can close above this previous high and these key moving averages, then I think the tide may have turned for gold and silver to start to move higher. So that's the point of view that I see for gold right now. And if we zoom out at the big picture, gold is in a very strong pattern still. As a long-term investor, really, gold has just started a major trend. And this is the first real major bull flag, which points to roughly $2,600 gold is the next stop when it can find a bottom here and start to turn higher. You want to touch on silver. If we take a look at the silver, it's down 1% today as we're talking about it. Silver's been trading in this big sideways range for quite a while, in this kind of range. And the drop that we had in silver, based on a drop in July, a bear flag, silver came all the way down, hit that 100% measured move, and actually flushed down even lower, which also hit a support level from back in September and November of last year. So it's had a bounce, but the silver chart looks really bearish still. It hasn't really had a knee-jerk reaction, like a strong rally. All it has done is traded sideways, which means likely going to see silver be under some pressure, could come back down to test this 2250 area, maybe come all the way down to 22, really put a test at these lows that we saw from last year. And we'll have to see what happens from there. So overall, gold and silver are still in a sideways or downward trend in major bull market phases. In terms of if we look forward a year from now, I think they're going to be dramatically higher. But as a short-term trader, They're down at support. They're still in a short-term downtrend, and you just got to be aware there could be a little bit more pressure here for another few weeks or a couple of months.
So it looks like on the chart here, if we look at the silver chart, we have major support around the $22 level. Do you see it breaking below that? Because you are mentioning how silver still looks bearish right now.
Yeah, I mean, it could still break down. If we were to use technical analysis using Fibonacci extension, we could get an idea where this next drop could be. So if I was to just zoom in on silver a little bit, if we look at this last drop and it came down to this low and this rebound high, it's going to show us where silver could head next. And to give you an idea of percentage-wise, 100% measured move will bring us right down to roughly $20, $20.20. So silver has potential that it could slide very quickly, another 13, 14%. Find support around 20, which is a nice decade number. Every 10, 20, 30, 40, those solid decade numbers will act as a support zone. It's also a measured move based on momentum, based on this drop and this rebound here. So there's still potential downside in this move. Obviously, it would break the lows from last year, and that will create some panic in the market. And panic is what puts a bottom in price. When most people get shaken out, there's going to be a lot of stops in here, meaning if it goes below this level, there's going to be a lot of traders, investors saying, sell my silver, I want out. That creates a sharp drop. We should see a huge spike in volume, which a lot of people dumping silver, and those shares or those contracts are going to be landing in people's hands or accounts that are comfortable to hold silver for the long term, and that's what puts a bottom in. They're going to hold it, and they're going to support the price. They're not going to be selling it anytime soon. So I think there's still downside potential for silver, but really, if it breaks the 22 level, that means we're going to drop quite a bit more to roughly 20. So it's going to be volatile, I think, over the next couple of weeks for silver and gold.
I think one of the interesting things to think about is, how much downside versus how much upside is there in the metals for silver. Then, that 13 or so % drop possibly for silver. But what is the upside potential that you see more long term?
Right. Okay. So if we were to look long term, we can let me just reset the chart. Long term, silver has got a pretty good upside potential here. We'll just use Fibonacci extension. Silver is pointing to $40 a share, an ounce, if it was to rally up. So up to this green line, which is roughly a 70% gain in silver. And that's based off this COVID low, this big rally, this huge consolidation, a bull flag, kind of like what gold is doing. And then a continuation move will bring us up to roughly 40. So there's a lot of upside in silver, and that's why so many people are excited about silver, including myself, is because it actually is a very volatile metal. And when it does break, it's got a lot of potential. And 40 is really just the first target. I think it could go a lot higher, but that's the next measured move based on this kind of big pattern that's unfolding.
So in your perspective, if people are looking to get into silver, is now a good time, or should they wait for the lower prices?
Yeah, it really depends on the time frame. I mean, if you're an investor, this is the time you want to buy it. You want to buy it on pullbacks, on corrections. Right now, it's down near support. That $22, $24. This is a pretty key support zone. If it breaks this, it's probably going to drop to 20 very quickly. Maybe down to 18 if it had some big panic washout low. If you're an investor, obviously these type of breakdowns are when you want to actually accumulate more for the long term. So yeah, these lower prices are what investors are looking for. If you are a short-term trader, I don't think you really want to be buying right now. I think if you want to just get in and try and catch a move, I think the odds are it's still actually going to go a bit lower. So you're going to be under pressure for a little while. By trying to, profit from higher prices.
Now, one of the other metals that we've been looking at in our interviews, we've been talking about platinum. It has had a significant pullback as well over the last month. Where does platinum stand in your mind right now?
Sure. So platinum was one of the last kind of metals here to break out. Let's just we put in this multi-year basing formation, started to break out just late last year. And you can see here, it's starting to have a pretty deep correction in the market. And it actually has a bit of a bearish pattern still. It has broken down through this kind of breakout line, this blue horizontal line. If we zoom in on this chart, it actually has a bearish pattern like silver, that it's actually pointing to lower prices. And the next level will be somewhere down in this consolidation zone because it has dropped. It's created this consolidation. The second half of that drop could bring us down to 900, 850, somewhere in there. So it is definitely fading back down into this kind of consolidation phase where we saw it go from more or less a sideways or downtrend, where it rallied up with a series of bull flags. And this is like the first kind of nice sized bull flag that fueled the second half of this run to the upside. For example, we have this first kind of run up, and then we have a multi-month consolidation, a bull flag, and then it had the second half of that move. And so the market right now is settling back down, and it's coming back into this area, which is where the kind of the breakout phase kind of started, the platform. So this is going to be a really significant zone, 850, 900 to the downside as a support level. It looks like it could break down any day and kind of flush a little bit lower. But in the grand scheme of things, it is still, it has broken into a bull market phase. It's got a series of higher lows. It's got a series of higher highs. And again, this here is, you could argue here, this is a big pullback before it starts to go higher to the upside eventually. Like back up to the 1300 and beyond. So, I mean, the metals are definitely out of favor right now. The dollar's been fairly strong, and it looks like it could be stronger. And I think that's playing a toll on precious metals kind of moving to the downside.
Now, in the grand scheme of things, how much of an impact has the U.S. dollar really had on the metals if we look at that?
I think the U.S. dollar's had a pretty good impact on precious metals. When we look at this ETF that it kind of mimics the price action of the U.S. dollar, we've seen a very strong move up in the last several months in the U.S. dollar index. And as the dollar goes up, we tend to see precious metals be under pressure. And really over the last several weeks here, we've seen a very inverse relationship where the dollar has a strong pop and rally and precious metals have a very strong drop. And so that's definitely at play right now. And if we were to just look at this pattern right now in the charts, the U.S. dollar's put in what looks to be a W formation or a double bottom formation. And if it breaks through this kind of level here, which it is threatening to break through, it's kind of like a really significant pivot zone. We're going to see precious metals probably take that next kind of drop in price. We're going to see some panic in the precious metals market as the U.S. dollar rallies up. And I think that could put in a major low in precious metals. So, and that's what I was talking about before. I think there's still some more downside potential in metals before they actually put in a full out bottom, just because this dollar here is on the verge of breaking. So long term, I like metals, but again, they're facing some headwinds. They're still in downtrends right now, and we need to see if the dollar is going to break out.
Now, one of the things I actually just asked David Smith, who is a senior analyst at the Morgan Report, he talks about how Bitcoin is really not a competitor to gold and silver. It's actually complementary. That being said, we have seen a rally recently in Bitcoin back to around the $50,000 level. Where does Bitcoin stand right now, and what is your perspective on its relationship with precious metals?
Yeah, so here's the daily chart of Bitcoin, and more or less it was kind of in a bubble phase, nice series of rallies and pullbacks. Eventually, it had this breakdown and it collapsed down here. And what we've seen here is if we just kind of box in some price action, if we just kind of box in a potential topping phase, and then it dropped and flushed down, and it more or less put in a consolidation phase. Whichever way it breaks out of these boxes is going to have a very strong move. Typically, the height of the box is the potential downside. And so what we saw recently is this rally in Bitcoin pushing its way higher. It got up to 50,000, which, as I talked about before, a decade number, something like 40,000, 50,000, 60,000, those whole numbers are going to act as resistance. And that's what Bitcoin went up and touched a few days ago, hit 50,000, and now it's starting to pull back a little bit. If we were to also just draw a line across this chart, you can see 50,000, this kind of range through here, is also a really significant zone on the chart where there was a lot of consolidation. We had price get close to it and found support. It tagged it here. It consolidated here for 2 days before breaking down. And so what acted as support before is now going to act as resistance. And it's that whole number as well. If we were to use Fibonacci extension on the most recent price action, we can get a little bit of a feel for this move. We can go to the high, go to the low, and carry that forward. You can see here that Bitcoin ran up, it pulled back, and it kind of kissed these key moving averages, the 50 and the 200-day, and then it took off to the upside, and it actually hit that 100% measured move, this green line, pretty much dead on, and now it's pulling back. So a lot of things are kind of unfolding at these key pivot zones on the charts for Bitcoin. It is now in an uptrend. It's making a series of higher lows, a series of higher highs. It has hit resistance. I wouldn't be surprised if it trades sideways a little bit more, but it is kicking back into an uptrend. So this could very easily start to head higher to 56,000 is kind of the next kind of resistance area on the chart.
Now, some people are calling, for $100,000 Bitcoin or even higher than that. Your perspective, do you think we could see that anytime soon?
I think 100,000 is a little ways away. That may be late this year, maybe next year, if this trend can continue. Now, I don't see that really happening this year. Really, the pattern that we saw unfold in the last year and a half, where it was a big, straight up parabolic move. If you look at the type of sell-off we've had, the bounce that we've had in the last couple of weeks to 50,000, it's actually the kind of the first bounce within a consolidation. I think we could see a very strong sideways move on the chart for another 6, 7, 8 months. And it'll be seen as a giant bull flag pattern, a lot like what we see in gold and silver, which points to dramatically higher prices. So it's just a matter of the size of the rally that we had. Now it needs to make a bull flag, a sideways consolidation that kind of matches the pattern that it has. So I think there's another 6, 8 months. And then I think it starts another big run. And that's when I think it could go up 80,000, 100,000. So there's still some more base building to do before I think it breaks and starts the run. But you never know when it's going to happen. I mean, if it's in an uptrend, you definitely want to be part of it. But at this point, to me, it's still in a consolidation phase that's going to be here for several months.
A lot of our viewers are keenly interested in, preserving their wealth in precious metals, and they look at the stock market and see that, by a lot of metrics, it's overvalued right now. Last time we had you on, you were talking about how the stock market could be topping out and it could start to crash. Since then, we've just continued to see the stock market hit all-time highs. So where in your mind does the stock market stand today?
Yeah, I mean, we're still long with long-term investing capital. We're still long with our short-term. There are all kinds of indicators that are screaming this market is overvalued. We're seeing bonds come back to life as well, like beyond PE ratios. We're seeing bonds come to life. We're seeing utilities are outperforming. There's a lot of things telling us that we need to be really aware that this market could collapse and sell off at any point. But until the trend actually rolls over and changes and breaks down and starts creating a new downtrend, you really don't want to be betting against this market, especially with the Fed constantly, doing easing and adding stimulus to the markets. I mean, the Fed, even if they trim the amount that they use every month, the banks and investors always use so much leverage. And so even if, it still trickles in, there's so much leverage. A lot of banks are still, betting 10, 20, 40 times leverage on a lot of stuff. I think there's still going to be money constantly pouring into the stock market to hold it up. I think we're going to eventually get into a euphoric stage where we're going to see the Russell 2000 take off. There's potential that it could run like 30%. The NASDAQ could run something like that. The SP 500, it'd be a huge move. And it would really be the last wave of investors. Anyone who hasn't been in the market for the last year or two, finally just saying, you know what, this is ridiculous. The market keeps going up. I have to get in. I'm missing the whole move. And I think this last rally could be really big over the next 12 months. And that'll be the sign. It'll be one of those bubbles kind of starting to a euphoric topping phase. It goes straight up. It's going to pop. It'll come straight back down, just kind of like what Bitcoin did. It could lose a lot of the gains that we've seen in the last year and a half. So, I mean, you can't bet against the market. I feel like it could have a big correction at any point, but it doesn't matter what you feel. We got to follow price, because price is the only way we make money, and there's no point in trying to call a top and trade against the trend. So
essentially what I'm hearing is maybe watch for that blow off top in the stock market. Because, I mean, if you look at the chart, it has just continued to go up, but it's been going up at a pretty steady pace. We really haven't seen that euphoric blow off top that you're talking about.
Right. And I think people will, I mean, the average Joe won't see it. They'll see it as like, oh my gosh, this is on fire, I'm missing out. But as like a trader investor who follows the markets, it'll be very clear to anyone with experience in the market going, okay, we finally hit that phase where price is going by leaps and bounds to the upside, and the chart will be going very vertical. And it's a great time. There's a lot of money that can be made there, but you got to be active and you've got to be ready to pull the plug, because after that is usually a very nasty ending for most investors. So you and I will be talking when this is happening. I'm sure of it. So we'll see it coming, and everybody can be like on red alert. But there's no signs of it yet. I think we're still months away.
All right. Well, it'll be very exciting to continue to track this. Now, Chris, if people are interested in learning more about your work, where can they find you? And please, if you have any last thoughts for our viewers.
Sure. Yeah, they can find me at thetechnicaltraders.com. And every morning I do a pre-market video, run through all the markets, metal, oil, all kinds of different sectors, kind of show everybody what's going on so they get a feel for the day, and share any trades that we're doing. And I think the big takeaway here is precious metals are right now, they're in like an accumulation stage where they're out of favor. This is a time when you, as a long-term investor, you want to be adding to metals because it's pointing to much higher prices down the road. Stock market traders and investors need to stay long. And, Bitcoin, I think, is still going to be consolidating in a huge range, maybe between 30,000 and 50,000, or 30 and 60,000, for another 3, 6, 9 months before I think it starts anything big. So that's kind of the big view there.
All right. Chris Vermeulen from thetechnicaltraders.com. Thank you once again for your time, and God bless.
Thanks, Elijah. Take care.
This week's special with Miles Franklin Precious Metal Investments. 2021 1-ounce silver Kangaroos for only $380 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.